Hello everyone, Corey Mitchell here with TradeThatSwing.com. This is your swing trading stock market outlook for the week of November 11th. Pretty good week out there last week, moving us from, it was a little iffy before the election and then just took off. So we'll look at how the indices are doing, any issues I see out there. If you're ever wondering where this article is, because it gets updated each week, you can check out, go to TradeThatSwing.com, the stocks and stock market analysis and trades, and you'll see it there right near the top of that section. Some watch lists you can check out. Best swing trading stocks list for November. That was recently updated. Just a list of very high momentum stock names to keep an eye on. How the market indices are doing. So I like to look at a few different ones. We have the NASDAQ, the S&P 500, NYSE Composite, Russell 2000, each looking at a bit different segment of the market. Also have the Canadian index over here, and we'll get to Bitcoin and gold in a minute. Sharp rally up. We had talked in prior weeks, NASDAQ getting a little sluggish here below the high and had just undercut that prior swing low. Not really ready to call it a downtrend yet, more just kind of a consolidation we talked about. If it bounced quickly, if it did continue down, then you start considering the possibility that that's rounded, turned over and heading to the downside, but it did not turn very quickly. Same with the NYSE, took out that swing low there, and you can see just kind of stalled right there. Very quick turnaround. S&P got almost to that prior swing low and then took off. So the uptrends have basically held in these, and the Russell 2000 a little bit weaker, but you can see still kind of making this upward progress. So it had made a prior swing high relative to this one. We're still at a higher swing low compared to this one. We are below that high from July, August area, but still making its upward progress. We'll see how this goes. But overall, we have a lot of stocks moving in an uptrend, so I would say the overall consensus here is that stocks are doing quite well, even though this one index is a little more sluggish. The S&P, the Canadian TSX Composite, also, a little bit deeper pullback here, but overall uptrend was still intact even with that pullback, and now we're starting to move back to the upside. So overall uptrend remains in play there. Bitcoin, we had talked about whether this can hold outside the old range. So last week was right around this mark, and it was, seeing if this will hold this old range. So I have something I like trading by called my range rules, and it worked extremely well throughout this entire thing. And then we finally had the breakout, so I was not very interested here. But once we had this breakout, I was interested, and it was waiting to see, does this hold outside the old range and then start to pop again? And it was absolutely beautiful. This is a 2-day chart. Even on the 1-day chart, it was just like, came back to the line, like a bottoming bar, and then it just started going right back up. So loaded up again on this one. And there were kind of opportunities during that range as well, where you basically had the same opportunity trading within the range, where you have these pops up, the pullbacks, and then you're trading a move toward the other side of the range. But this one really nice, and this is Sunday having a really strong move up in Bitcoin as well, averaging the weekend here basically with a 2-day chart. The gold miners, a bit of a problem here for gold. So we have a big undercut of the prior swing low. The equivalent swing low on gold, the gold ETF, still at a higher swing high, but that's a divergence. We do often see the gold miners sometimes leading gold. So I don't love this. Even though gold, if we just looked at gold, gold's still in an uptrend, but the gold miners starting to weaken. And from how I view trading, once this kind of thing happens, and we are in a little bit of a situation like what we talked about with the NASDAQ here, like it's just kind of undercut it, just a touch, right? So, and we've starting to bounce. So if it bounces and it rallies and gold rallies, that kind of nullifies the situation, right? They're both moving up. It was gotten a little bit weaker for a time, but now it's acting better again. If this were to drop more, then we're kind of out of that scenario where it's like, oh, well, maybe it was just a little bit of a false breakout. Like we could be in that situation here. If we kept dropping, that would nullify it. So yeah, I probably won't be doing much with gold. If a gold stock happened to pop on my list, maybe I trade it. I've been mostly sticking to the best swing trading stocks list for November, and off the top of my head, when I went through them, I can't remember there being much in the gold anyway. So that doesn't matter too much to me personally, but yeah, basically this situation needs to be rectified somehow. So the gold needs to go up, and the gold miners have to go up with them, or even the gold miners would have to go up more aggressively, maybe even ahead of gold, to kind of rectify this divergence that's going on. And if it doesn't, and they kind of both stay weak, then I'm out anyway. So basically, need to see strength before I would get in. What would strength look like? Well, we'd have to get a really strong pop, higher swing low. We could still be in a situation where we're forming around the top, even at that. So, I mean, ideally, it's, all the doubts removed once the price gets way back up here and makes a new swing high. But, a really strong rally, kind of smaller pullback, and a resurgence again could maybe get me into a trade. Again, I like trading more the individual stocks, not GDX. So, but it does give a good kind of idea of where most stocks are at. But yeah, I'd be looking for the really strong ones, the ones that haven't diverged, right? So a lot have, because this is kind of a average of many of them. So a lot of have had this big move down. I'd be looking for the ones that are still in the uptrend, kind of more resembling what gold's going through, if you're going to be looking in that sector for trades. For me, there's a lot going on that's making money right now, so it's not too important for me to, trade something where there's a bit of a red flag going on. Let's look at the market health indicators. This is kind of what's going on under the hood. S&P, as we can see, moving to new highs. Volume not important to me at this stage in the price action. It is more important to me after pullbacks and once we start to move back up. So this I don't even consider a pullback. This is only about 3%, not significant. But when we have bigger declines and then we start to move up, that's when volume becomes important to me. And it's pretty much the only time I look at it in terms of the indices. In stocks, I look at it at a couple other times, but not for the indices. For rate of change, we had this bigger drop on Halloween, and then it's been quickly recovered. So that was basically neutralized by some strong upside volume. Uptrends are usually characterized by lower volatility, but a nice big gap up day, I don't think anyone's going to complain about it. So a little bit of heightened volatility there around the election, but overall to the upside, so we can call that bullish. We just don't want those big downside days. And yeah, that big downside day neutralized. This is a smiley face. This is the NYSE advanced decline line. Advancing stocks minus declining stocks is a cumulative number. You want to see that going up or even moving ahead of the indices. And you can see it is up at new highs along with the S&P, and it was bullishly diverging with the S&P. The S&P had this little drop off, and the advanced decline line was holding steady. So that was a bit of a positive indicator. We had talked about that last week. The up volume divided by total volume, I'm just looking for extreme readings. We have not had any in a long time, like hitting this upper black line or this lower black line, and none of those. So that's just a neutral nothing. This is how many stocks, the percentage of stocks above their 50-day moving average. 67% of all U.S. stocks are above their 50-day moving average, and 67% of all U.S. stocks are above their 50-day moving average. So basically lots of stocks in uptrends right now, generally easier to make money on the long side. Sectors on the move. Basically, it's these kind of top ones: industrials, consumer cyclical, technology, financials. And because if you look down at the next one, communication services, financial, consumer cyclicals, industrials, technology, they're the top there as well. And consumer cyclical, financial, technology, industrials, communication services, the top sectors over the last 3 months, the last 1 month, and the last week. So those are definitely the ones to keep an eye on. Conditions do change as we discussed throughout the week, so you want to kind of monitor everything that we talked about throughout the week to see if they change and how you want to adjust accordingly. What I'm doing, I'm taking long stocks. I'm holding Bitcoin, and yeah, it's had that really nice run. We'll see how that goes. Taking longs on stocks for sure. Things are looking good. Things are running at the moment, and again, like I said, conditions can change, so we're watching that. Gold stocks, not super of interest. If you were looking at gold stocks, you'd want the ones that have held up above their prior swing lows, still resembling that uptrend that more gold's in, as opposed to GDX, which has the more average of all of them has started to break down. So that's not super appealing to me. And like I said, there's so much that's running to the upside right now. It's like there's no reason for me to really trade gold if I don't really like what's going on with the miners there at the moment. You can always day trade the Euro USD, stocks, currencies. Yeah, some different options if swing trading in this kind of hitting when conditions are good and then backing off when they're not. That can sometimes mean we have days, weeks without much action, and then it's kind of a flurry of action. And day trading, we're doing the exact same thing, but it's all condensed within an hour. So you're sitting there for 20 minutes while nothing's happening, and then you get some opportunities, and then you sit there for 10 minutes and nothing happens, and you have a little flurry of activity. So it's the same thing. It's just more condensed. So that might, just depending on what suits your personality, you can do them all or both or just one. Anyway, have a great trading week out there.